that's where you focus, vertical AI. You know, I reflect that over the last year and more, at the very early stage, we've seen insane seed rounds of Neolabs.
Yes.
Still intense news headline domination of Anthropic and OpenAI. You think there's a lot more out there?
So we're at a very interesting point in time right now where we've shifted from the first stages of enterprise AI adoption, where it was all about the race to intelligence. Who has the better models? Let's find the use cases. And now we're entering an era of true deployment. Right? So fitting these solutions into everyday workflows, into existing systems, figuring out precisely what the use cases are, and of course, having measurable ROI. This shift dramatically favors, I would argue, vertical AI companies. These are companies that have deep domain expertise, they have deep understanding of their customers, and they have the capability to solve the long tail of things that could go wrong. And as intelligence continues to commoditize, everything else around intelligence will become more important.
You were raised by a software engineer. You have had a lot of experience in the world of finance, financial markets, and you've been a software investor. You still need to model somehow that there is an addressable market for vertical AI. How are you doing that? Like, is it there a public proxy? Is there an example to follow?
So the pitfall is when you look at historical software spend for some of these verticals, because they could be very, very small. Take residential real estate, for example.
Yes.
If you just look at the comms and look at historic software companies focused just on that sector, it's not interesting enough for many VC investors.
Yep.
However, what we're seeing now with AI, in particular AI agents, is that the agents are taking ownership of the workflow end to end. It's no longer just about digitizing paper, but it's about automating entire workflows. And that lets you tap into a much bigger market, which is the existing labor market and the services market. So the best vertical AI companies that I'm seeing are very TAM expansionary. They're creating net new market.
The hard question is, why don't the foundation model companies and frontier labs just go after that addressable market too?
That is a great question, and I think it all comes down to a difference between breadth and depth. The reality is that these foundation models have been and will continue to build massive businesses, but they can't do everything, and it comes down to focus. When you think about these very specific vertical AI companies, they are hyper-focused on going that last mile to make sure every edge case is covered. They're integrating deeply into existing legacy systems, some of which haven't been changed in decades, and they're deploying armies of experts as forward deploy engineers to actually sit with the customer and work out all the kinks. Can the model companies do this? Yeah, they will do this for some of the largest models, but they can't cover everything.
So interesting to hear about legacy industries, entrenched industries that have a hard time changing their habits, right? Legal services, healthcare. But they're very different from one another. Is there one particular domain that you are most bullish on right now that will be just completely upended by a vertical AI offering?
That's a great question. I tend to think that the most interesting vertical AI markets are actually hiding in plain sight. And what I mean by that is, at first blush, these industries don't look super attractive. They tend to be super operationally complex, a lot of edge cases. I like to call them very gritty industries. And many founders might take one look and run away. But it turns out that grittiness is not a bug. It's actually the moat, right? If you can crack that and really get into the workflow, it becomes really, really sticky. So a great example, I mean, I called this out already. In one of our portfolio companies, Elise AI is focused on residential real estate, right? That market is, again, not a huge software market historically, but probably around $200 billion when you consider labor and services. Elise has now taken, built products that cover the workflows end to end, really expanding into that market. And today, they've crossed over 200 million ARR, and shockingly to me, they cover 1 in 6 U.S. based apartments.
Let's go macro a little bit. The news cycle has been dominated in the last 7 days about open models.
Yes.
A number of prominent leaders in technology, Jensen Huang, Satya Nadella, as a sort of coalition, came out and
Yes.
said we need America to do more on open weight models. What was your reaction to that, and why do you think they timed it such as they did?
Well, first of all, the letter was not surprising to me at all. If you just follow the incentives, especially around economics, it makes all the sense in the world. The companies that signed the letter that supported open weight models are exactly the companies that stand to gain from having a wider ecosystem, right? The more models there are, the more money Nvidia makes. So none of that is surprising to me. I think what was surprising a little bit is the timing, right? Why now? And you could guess, a lot of these companies are getting ready for IPO, and they want to take control of the narrative.
It's interesting. I was going to say the timing also immediately post OpenAI and Hugging Face. I mean, in that example, right, Hugging Face looked to open models to defend itself. It was a cyber case study. As a venture capitalist, as someone that helps companies get off the ground, but is trying to make AI a positive story, frankly. Yes. How did you interpret that?
Well, I'll say that open weight models, I think in general, are great for the industry. A lot of our apps companies, if they have more access to models, more competition at the model layer, it'll drive down costs, and they'll have more options to choose from. And I definitely believe that's where the future is moving. In fact, the best AI companies are already multi-model companies.
Right.
On the other side, there are real risks that we have to think about as an industry, from security to safety to IP. And part of the reason why I think it was such a wake-up call to see the Hugging Face OpenAI story is reminding ourselves that security is not something that we could diminish. And in fact, we actually spend a lot of time investing in cybersecurity as well at Sapphire Ventures.
Let's finish by reflecting on Sapphire Ventures. What I recognize is even at the earlier stages, there are private growth equity, mutual funds, crossover funds, public-private funds from some of the biggest Wall Street firms involved in that field. You're a $10 billion firm, but what's that been like in the last 12 to 18 months?
That's such an interesting question, Ed. We're really starting to see a barbell distribution in terms of our investments. We're seeing some companies really break out, especially in particular verticals, but also horizontal companies, as well as infrastructure companies, where they've taken the leadership position. They've built distribution channels. They've built platforms that we feel like give it a better shot at defensible durability. And it's no longer growth at all costs. Growth is very, very important, but the narrative has switched to what about durability in the long run? And so we're investing in later stage companies that we see follow that arc, and we feel like are initially cementing themselves as leaders, but we're also looking at the very early stage companies, post product market fit, but still early stage companies. And there we're backing the best founders in thematic areas that we really like.
What's the benefit of going with Sapphire and not with another firm? What is your unique selling point?
Oh, that's a great question, Ed. First of all, we are very focused on enterprise AI. That's all we do. Everything we do is B2B. And so that specialization and focus really comes across in different ways. We have a massive support team to support our portfolio companies, from BD to talent, and everything, again, is geared to these companies where we've seen across the last 15 years that we've been in business. And the second thing I'll say is we strive every day to make our founders happy. I think we're one of the few venture firms that track founder NPS. We solidly believe that the only way to build a lasting franchise is that our customers, which are our founders, really love us and promote us.